Well, welcome back. Time now for the Word on Wall Street. Top investors watching your money. Joining me now is Infrastructure Capital Advisor, CEO and CIO, Jay Hatfield. Also with us is Ryan Payne this morning. Jay, great to see you. Welcome to the conversation. Good to have you here. And we've been talking all morning this morning with Ryan about this issue in Venezuela. I want to get your impact and your thoughts on this in a moment. But what are you thinking about in terms of allocating capital in 2026, Jay? What will drive things?
Happy New Year, Maria. Well, we're super bullish. We have an 8,000 target. You know, and we've had accurate targets. We had 7,000 last year. And the reason we're bullish, you're going to see that right away, is that we're extremely bullish about inflation. We see it rolling down to 2.4% after the first quarter. So way faster than most people think. And that's because shelter is finally coming down. And so we think we'll get 3 rate cuts, lower rates. That'll support our aggressive 23 times target for 27 earnings. So that's what supports our 8,000 target.
8,000 on the S&P 500, and technology stocks, of course, were the main driver because of AI and other growth elements in the president's agenda, driving equities in 2025. Do you believe this AI trade, this tech trade, stays in place for 26?
We do, but we don't think the NASDAQ will significantly outperform the market as a whole. So it's going to be fine to be in Dow stocks, you know, like Chevron, Exxon, or Dow stocks, to be in small caps. So you won't be rewarded for just being in tech. Tech will probably just participate with the market, be up sort of that 15%, but not up 30, with the rest of the market really, you know, having all the oxygen taken out because of tech.
Ryan, you agree with that? 8,000 target on the S&P 500 is what Jay's talking about.
Jay, you're blowing my mind this morning. That's a very, very high target, probably the highest one that I've seen. I don't know if we get to 8,000 this year. We know earnings growth per share is going to be something like 15%, so it is going to be very good. And I do think this whole AI revolution makes every company an AI company in the sense that you're going to see huge productivity gains. You're going to see margins go higher. And I do think there still is a big bid under that Mag-Sev trade, only because think about every dollar that goes into the S&P 500, and a lot of investors buy that blindly. You know, almost 40 cents of every dollar is going to go into the Magnificent Seven plus Broadcom. So there's still a lot of exposure there that automatically goes into those stocks. But, you know, I think bottom line this year, kind of going to what Jay just said, is there's a lot of other places to put your money. You know, specifically, I would say dividend-paying stocks, which, let's face it, NVIDIA pays like 1 penny a quarter. They don't pay many in dividends. Whereas right now, you know, you have, we talked about a lot about oil today, but MLP infrastructure, master limited partnerships. You know, we're going to see a big global demand in natural gas go up again this year. You're getting like an 8% dividend on those type of stocks. If you look at small caps this year, like driven by, you know, if you look at like pharmaceutical stocks, you look at financials, all of those look very good. They're trading much cheaper multiples. Earnings growth is going up. So I'd really urge investors to look for dividends right now because they're on sale, and they did underperform last year. So I think that's a great place to allocate capital.
Yeah, it's a great point to mention, and certainly a good investment idea to follow dividend growth. And oil companies pay big dividends, Jay. What about oil prices following the overthrow of Venezuelan dictator Nicolás Maduro? Energy stocks this morning are skyrocketing, and we've been talking about Chevron, the only American company that is still operating in Venezuela. It is poised to win big here. This morning, the stock is up better than 6%, had been up close to 8% earlier. President Trump says the U.S. will run Venezuela with billions planned to invest and rebuild infrastructure and eventually boost production. Analysts expect oil prices could not move much in the near term, but longer term, these are huge opportunities. Your thoughts, Jay, on the oil sector as potential investment?
I also believe in dividend stocks. So ICAP, our large cap dividend fund, their biggest holdings are Exxon and Chevron. So these are phenomenal companies, irrespective of the current events. Chevron has a huge advantage operating since they've never left. And keep in mind, 20% of the world's oil reserves are held in Venezuela, but only 1% of the production. So they used to produce 3.5 million barrels, and now producing 1. The only caveat, and you can see it already in the market, it's not going to happen overnight. First, we need stability. And this is very heavy oil, so very hard to produce, very viscous, hard to refine. So this is not going to happen overnight, but a huge long-term opportunity for Chevron, which is a phenomenal company. So, fitting into the theory we've been talking about, it's okay to have other ideas besides just tech.
Yeah, for sure. Look, we're also waiting on two major announcements. Ryan, you've got the Supreme Court and the decision on President Trump's use of tariffs in an emergency. And, of course, the president's announcement on who he wants to be the next chairman of the Federal Reserve. Secretary Scott Bessent, Treasury Secretary, told me both decisions are set to come this month, all ahead of the corporate earnings season, which also kicks off next week. Another market catalyst. Ryan, your thoughts on these developments and what that looks like in terms of your portfolio?
Well, I think there's only 30% odds the constitutionality of actually the tariffs that are in place, but I suspect that the Trump administration come up with another reason why those tariffs should stay in place, and I'm just hard-pressed to think that whatever it's close to $200 billion now are going to go back to these companies as a refund. The government's very good at taking your money and not giving it back, so I would bet that that probably stays intact and that the tariffs do stay in place this year, which, again, could be a potential to balance that deficit. We'll see, or balance the budget, which we haven't been able to do for decades. I think when it comes to interest rates, look, you don't need a weatherman to know which way the wind blows. If it's Kevin or Kevin, who is our next Fed Treasury Secretary, rates are probably going down. Now, the market has two rate cuts basically priced in for the year. My biggest concern here is not the slowing of the economy. It clearly looks like from all perspectives it's actually heating up, and we're looking at tracking 3% GDP growth for this quarter. Does the Fed accidentally overheat the economy by cutting rates too many times? So that's what I would keep an eye on here. And that's what I'm more concerned of, is more like a melt-up, melt-down situation, because clearly markets have been melting up. You talked about this last year all the time. So I would keep a close eye on that. Again, the big concern here is, does the Fed take it too far, which remains to be seen.
Well, Jay, you just said you're expecting 3 rate cuts from the Fed. Does any of the data this week affect your expectations on that, Jay? You've got the ADP number. You've got the jobless numbers for the month coming out on Friday.
Most people have missed that we're already in a recession with regard to construction and the residential sector. And so employment is weakening. That has helped the Fed to cut, and may even allow them to cut in January if we have weak numbers. But really, the heart of our forecast is that we are super bullish about inflation. And we do think as long as the Fed cuts, then construction and housing will gradually improve. But we would be bearish on Friday, just with a caveat that that's very dirty data, very unreliable, and particularly unreliable due to this shutdown. So even if the long-term trend's down, it could still be positive. So it's not going to change our view, even if we have a good report on Friday. All
right. Well, look, I mean, we know it will be a noisy report because of the government shutdown, but 8,000 target on the S&P. Giddy up. We'll be watching, Jay. Great to see you both. Thank you, gentlemen. Jay Hatfield, Ryan, you're with us all morning long, and we are grateful for that. Thanks, guys. We'll see you soon.